Welcome to today's Explainer. Today, we're tackling a massive challenge that literally every organization is facing right now. Look, if you've ever felt like you're just drowning in this absolute ocean of chaotic numbers, endless spreadsheets, and dense market reports, well, you're definitely not alone. We're going to unpack EViews for econometric analysis and really explore how this specific tool helps organizations not just survive, but actively thrive in our wildly data-driven business environment. So here's the million-dollar question. How do you actually turn endless data into actionable strategy? Because frankly, it's a massive risk right now. You've got all these incredibly complex data sets, right? But without a clear way to forecast market behavior, assess economic trends, or evaluate your outcomes, that data is virtually useless. It's just sitting there, eating up server space while your competitors pull ahead. What we absolutely need is a reliable way to generate solid statistical evidence to actually base our decisions on. Okay, let's dive into this. Here's our roadmap for mastering organizational data. We're going to quickly cover the data-driven business era, insights through econometric modeling, the power of predictive analytics, driving modern business intelligence, and finally, shaping future organizational success. Starting off with part 1, the data-driven business era. The ultimate goal for pretty much any modern business is sustainable success, right? And the vehicle to actually get us there is rigorous quantitative analysis. You just can't rely on gut feelings anymore. It's way too risky. Analyzing economic trends and rigorously evaluating financial performance, these are the absolute critical first steps for any organization wanting to allocate resources effectively. I mean, if you want to know exactly where to spend your money, where to cut back, or where to invest for the future, you have to quantify the landscape first. No way around it. And that brings us perfectly to the core capabilities of EViews. We're talking about regression modeling, which is basically finding those hidden mathematical links between different variables to figure out cause and effect, along with time series forecasting, hypothesis testing, and predictive analytics. Honestly, the best way to think about it is like a strategic translator. It takes these super advanced statistical methodologies and combines them into an incredibly intuitive analytical environment. It literally takes your chaotic data and speaks it right back to you in the language of actionable business intelligence. Moving right along to part 2, insights through economic modeling. Let's just demystify the technical jargon right out of the gate here. Economic modeling is simply the use of quantitative models to understand relationships between economic and business variables, all to support evidence-based decision-making. And that's really it. It's just a highly structured way to understand exactly how one thing affects another. Whether you're evaluating constantly shifting consumer behavior or you're trying to pin down your exact financial performance drivers, these quantitative models give you the hard evidence you need to make the right call. Now, what's really interesting about this slide is how we handle the chaos of different data formats. Usually, managing immense amounts of data means you're constantly juggling. You've got time series data tracking changes over time, you've got cross-sectional data sets capturing different subjects at a single snapshot in time, and of course, panel data sets that mash the two together. But EViews efficiently manages all 3 of these in one completely unified platform, so you don't have to bounce around between 5 different software tools just to get a complete picture of your business variables. Let's look at how this actually plays out in the real world. It's essentially a 3-step journey. Step 1. You apply regression models to investigate what is actually driving your organizational outcomes. Step 2. You run diagnostic tests. And, this acts as a really crucial safety net to catch potential accuracy issues, which massively strengthens the reliability of your findings. And then finally, step 3, you develop robust frameworks. This means your analysts can go ahead and confidently make strategic recommendations based on fully validated, statistically sound research. That brings us to part 3, the power of predictive analytics. When we talk about anticipating the future, organizations absolutely must be evaluating specific forecasting targets. We're looking at things like inflation rates, financial market trends, consumer demand, and business growth projections. And why is this so critical? Well, because accurate predictions in these specific areas support drastically better resource allocation, incredibly improved risk management, and just way more effective long-term planning across the board. Look, if you can anticipate emerging opportunities or potential challenges before they even materialize by forecasting these targets, you are quite literally miles ahead of the competition. And this brilliantly illustrates how the predictive journey flows across a really clear timeline. Point 1 is the past. Those are your historical observations. Point 2 is the present. That's your analytical workflow where the forecasting methodologies are actually applied. And point 3 is the future.
generating those all-important strategic business projections. The software essentially acts as this powerful engine right in the middle. It takes historical data, identifies the hidden patterns, and turns the whole thing into future-proof strategic insights. It's honestly almost like having a statistically grounded crystal ball.
All right, part 4, driving modern business intelligence. The sheer flexibility of these tools across different sectors is just vast. Take financial institutions, for example. They use econometric models to assess market trends and pinpoint highly specific investment opportunities. Then you have everyday businesses using them to evaluate their operational performance and forecast outcomes. And even policymakers are relying on them to measure the actual real-world effects of economic interventions. So you've got these incredibly powerful, evidence-based recommendations being generated across completely different industries, all stemming from the exact same core methodology. But the ultimate value here really lies in simplifying these incredibly complex research processes without ever compromising on methodological rigor. It ensures that transforming raw quantitative data into actual business intelligence doesn't require you to have a PhD in computer science. But at the same time, it maintains the strict statistical validity that a PhD economist would absolutely demand. Suddenly, these super advanced tools, like complex hypothesis testing and intensive panel data modeling, become truly accessible to the teams that actually need them. Which brings us to our final section, Part 5, Shaping Future Organizational Success. So, the crucial point is this. As digital transformation sweeps across literally every industry, the demand for professionals who are actually capable of interpreting quantitative insights is expanding exponentially. These tools empower users to build those essential analytical capabilities. They support incredible innovation in modern research. They drive truly informed, evidence-based strategic decisions, and ultimately, they ensure sustainable organizational success. It's just an invaluable platform for completely reshaping how organizations handle evidence-based management from the top down. I want to leave you today with a final, really important thought. Is your organization just guessing the future, or are you actually modeling it? Because in today's economy, let's be real, the organizations that guess are the ones that fall behind. The ones that actively model their data and transform historical observations into validated, confident future projections, those are the organizations that lead. Thank you so much for joining me for this explainer. I really hope this has sparked your curiosity on how you can start applying econometric modeling to your own strategic planning. Catch you next time.